If BlackRock comes in with billions, is it likely the price of Bitcoin will become more stable and less likely to crash as in previous cycles? It has been stated that 0.3% of our funds under management, of their funds under management should be, would suck up all available Bitcoin on exchanges, and going forward, they'll be able to buy all available at the next all-time high when lots of people will inevitably sell. So we're going to touch on this a few times today, but of course every asset has its price. For every buyer, there's always a seller and vice versa. But let's dig into this and let's talk about what I call hardness amplified. I always talk about Bitcoin being the hardest asset. Well, it's just about to get a whole lot harder. This is incredible. Kiwi, you're too much. But here you can see the supply of Bitcoin has been declining for the first time in its history. You've heard my thesis about 14 million max coins because so much is lost, Satoshi lockup, etc. People are losing their coins every single day. Even trusted custodians with the name like Crime Plus, Prime Trust, whatever, in their names, they lose the keys. So it's like the pros are losing them as well. So that's why I say never more than 14 million Bitcoin. And that is kind of sad, but that's okay. Because as Satoshi said, every time somebody loses Bitcoin, it's a gift for people that have it. Anyway, this decline supply is likely to lead to a massive bull run in the future. I don't know if it's this bull run we're currently in or the next, but it's coming. That I'm certain of. This is because there is more demand every single day for Bitcoin, and the supply is drying up. And that means price goes up. That means the pace of hardness is increasing. And the institutions are here. BlackRock, Fidelity, Deutsche Bank, Credit Agricole, Citadel, you name it. They're all coming, and probably hundreds more. And even these few names run AUM of $27 trillion. The market cap of Bitcoin's $500 billion. It's ridiculous. And only a tiny fraction of that $500 billion in market cap is for sale. So you guys can do the math. It's the most beautiful macro and economic experiment I've ever seen in my life. And I just get excited every day to look at the data. Anyway, the point of this chart here is you can see the available holder supply as a percentage of total supply. And marked in black dots are the actual halving cycles. This is the first time ever in a halving cycle where the supply is going down before we're even in it, ladies and gentlemen. And that is exciting as hell. So I encourage you all, stay healthy because the next 8 years will be fantastic. Now let's talk about the Blackrock allocation impact on Bitcoin price. I've covered this a few times before. But even if they allocate half of 1% of their assets under management, and we're just talking one firm with their BlackRock ETF, and I know their Aladdin system will tell people to allocate at least 1 to 2, maybe 5%, the price will go insane. There is an arms race on now for the big money banks to get into this thing. Even the IMF flipped yesterday. I covered that in yesterday's video. Now, there is a piece that everybody's very, very concerned about, and that is this. Market manipulation, we know. Big boys, the BlackRocks, JP Morgans, they play funny games out there. And I'm not casting any aspersions, just pulling up ancient history and everything else. But this is because of naked short selling. Now, this doesn't mean you sell stuff short without any clothes on. This means you sell it without owning the actual financial instrument. And this chart basically shows you how, people that can have futures contracts or options. In fact, Bitcoin's coming out with a new futures contract on Tuesday. You can actually technically play with the asset without owning or borrowing the underlying asset. And critics argue that large financial institutions can engage in excess of short selling like they've done with gold and silver for decades, creating an oversupply in paper contracts in the market. And this oversupply exerts downward pressure on prices, potentially benefiting the institutions and their trading. So a simple example of this, the gold market, the paper gold market is 130 times larger than the spot gold market, 130 times more paper. But one of the saving graces that BlackRock did, because one of the concerns that the SEC had was market manipulation. So that BlackRock are working with NASDAQ to monitor all trades and manipulations. So maybe, hopefully to prevent this, but at the same time, the SEC is approving lots of Bitcoin futures, even leverage futures. So with that, net, it's a positive for the space. Yes, I do believe it'll stabilize the price to a large extent. When retail sells, we've seen the whales buy time and time again this year. People know what's up. And I feel sorry for those that are selling this asset, because a lot of people, after, this is typical behavior too, a little bit of psychology here. After what we've been through in 2022, people are actually almost too fast to take profits. Oh, I'm up 85%. Take it off the table. Buy back in lower. I've experienced many times in my life, you never get a chance to buy back in lower. Yeah, some of the time you can. But with exponential assets, it's a risky maneuver. I'll talk more about that actually later.